Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Monday, May 15th, 2023. Before I click on all the charts, just want to encourage you to once again, please click like each and every time you watch the daily Apple report. It helps us out a great deal in being found on YouTube. Also, become a Wicked Stocks YouTube channel subscriber. You'll be provided notification each and every time new content has been uploaded for your viewing, and that includes the daily Apple and daily Tesla report, as well as an occasional stock pick. And check out wickedstocks.com, where we offer a full suite of daily and weekly analytical videos just like this: the daily SPY report, the daily Triple Q report, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks that you never see on YouTube, all for a very reasonable $47 a month. And we offer a 5-day free trial that goes with that. So if you don't like what you see after a few days, you can cancel for no cost whatsoever. Anyway, let's move on to the charts. Just a reminder that a couple of weeks ago, Apple settled a week ago last Friday above this significant long-term channel structure, 171.02. It held last week's low. We closed negative on the week. A bit of a mixed bag. I still don't think that this buy signal is ripe for or tending toward rejection. I still think that this is a buy signal to respect in terms of its ability to sustain upside momentum as we move into the third quarter and even into later year. There is hesitation, certainly, but holding above 171.02, continued weekly settlements at or above 171.02, maintains a 182.94 3 to 5 week upside objective by the end of June or sooner. Let's put it that way. And over the next year or less, 218.37 in reach. This could be by the end of this year. We could reach 182.94 over the next few weeks, top out there for a week rather than a month, and closing above 182.94 should result in acceleration or continuation of what remains an accelerated rally, actually, following that January low. So that is really what I'm seeing now, above 171.02. So let's take a look at the daily chart. I still have 179.83, this channel top we have yet to test. And it will be converging over the next week and a half with the 182.94 all-time high from January of 22. So there's almost no point in really talking about that other than if we were to close today above 175.81, we should see 179.83 within 2 to 3 days, where we could top out through the rest of the week. As this 179.83 closes in on 182.94, I will consider it part of a range of resistance. You may consider it to be the same anyway, where they're both sort of 3-star resistance areas that could contain weekly buying pressures, part of a range that you could take profits in or sell into outright. And I'll get to that, I don't know about in this video, but at some point. Now, if we close above 175.81, we should once again test 179.83 within a few days. Until then, this is still our day resistance, still able to contain session strength and a meaningful upward pivot point into later week. So for day traders, very well suited. 3 to 5 day swing traders, perhaps, but you're still selling within the confines of a very recent long-term buy signal above the 171.02 level that I opened the video with. And so just be careful, I guess, is what I would say. But for aggressive day traders, you want to go obviously with the trend, but if it's just for the day, 175.81, excuse me, well suited for a short play. If we happen to close above 175.81, then you're basically getting long 3 to 5 day swing traders up to the 179.83 formation, where 3 to 5 day swing traders can actually play the short side then through the rest of the week. Now, downside, there's really not much to talk about. We've got, well, I'm going to finish with the upside here. This is actually another testament to how all the minor points are carefully chosen. 174.69 is a minor point. You could almost call this an intraday resistance level. I'll tell you, if 175.81 wasn't hovering just above it, I would call this an intraday upside pivot point that if pushed above should result in follow-through buying. But as it is, we've got 175.81 that can contain daily buying pressures if we push through 174.69. Downside, I just have a horizontal line representing that 171.02 long-term channel top on the weekly chart. And it's about as simple as that. Sorry, here we are, 171.02. So also 171.02, you have to take a look at the daily chart version of the same. That's at 170.82. It really is a 20-cent range here. And even if we close below 170.82, it really, I mean, here's the thing. I'm going to finesse this just a little bit. For those of you who day trade or even 3 to 5 day swing trade, a mere daily settlement below 170.82 does open the door for bearish continuation into later week. And the question is to where, and I would say possibly to 166.68. So if we close below 170.82, we've got 171.02 that we show here, but the daily channel is at 170.82, so it's a 20-cent range. If we close below 170.82 today, this 166.68 formation in reach probably tomorrow with that kind of volatility. And so if you wanted to play that, you certainly could. But from my perspective, in terms of the big picture, when is this sell signal absolutely, or this buy signal absolutely wrong? When is it rejected? Which is in essence a valid sign of weakness then if we move once we move into June trade. So if we close below 170.82, this formation here on the daily chart, then we have an intro weak sell signal. But in terms of the big picture, I'm not convinced this market wants to sell off in a meaningful way unless we close the week Friday at 169.31 or lower. And that is the 1% violation of 171.02. And if that does occur, then yes, not only 166.68 within a few days, but I'll then take you to this chart where within a few weeks we could fall to 157.60, and possibly within a few months, we don't have it outlined yet, but it'll be in the 140s, the upper 140s. There's an extreme channel bottom also coming up. So if we close the week 169.31 or lower, doesn't look good. I will say, even on an intra-week basis, 169.31, if we close that on Wednesday, let's say, or Tuesday, we close 169.31, or today, 169.31 or lower, that is an intra-week sell signal. But in terms of the long-term outlook, I'm not going to be convinced the rejection of this long-term buy signal unless we settle the week Friday, 169.31 or lower. Because that weekly chart can look like a spike below this area. And if we close above 171.02 on a week-by-week basis, we're still in a constructive dynamic. I just want to throw that out there, that these things take a little time to materialize. But, risk management is risk management. If you are long the market right now in the low 170s, 169.31, that doesn't offer a very, that's a very reasonable stop loss for most people. I wouldn't take it any lower than that if I were long based on the buy signal above 171.02. I think you can put your stop loss at or just below 169.31, for instance. And I'm just trying to think if there's anything else to say. All I will say is if we close any day this week, 169.31, no argument from me in terms of bailing out of a long position. You can even play the short side. But in terms of an aggressive short position over the next 3 to 5 weeks, that would come with a Friday settlement of 169.31 or lower. And then I would expect the upper 150s within several weeks. And I think even lower. We'll have outlined another channel structure here that'll be in the upper 140s. I think that pretty much summarizes it for Monday's Apple report. I'll be back tomorrow, of course, with Tuesdays. Please click like, subscribe, and check out wickedstockscom.